It's 6 o'clock in London, it's 7 o'clock in Valletta in Malta, 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. After the summer break, the IPO-VID LiveStream Series 13, Episode 4, that's our 76th episode, ladies and gentlemen, starts here. We can only start with one story, which has dominated world headlines for the past week. It, of course, also involved the parish of exchanges. The end of the Elizabethan era in Great Britain and Northern Ireland and across the British Commonwealth with the death of Her Majesty Queen Elizabeth II, the longest reigning British monarch at 70 years and 214 days. They were preparing children of my era for the Queen's demise at prep school before my wife was born. Come to think of it, actually, the administration of the United Kingdom was planning the funeral of Queen Elizabeth II more than a decade before that, well before I was born. At 96 years of age, after a 73-year marriage and over 70 years on the throne, it's worth noting that barely 1% of her subjects were alive when Princess Elizabeth was born. Fewer than 1 in 8 were alive in the United Kingdom across the Commonwealth when she ascended the throne in 1952. In the parish, I can clearly recall seeing the Queen. She visited the Life floor, that was the Future Exchange, on the 11th of February 1992. The atmosphere in the pits was febrile throughout the day, and the traders were delighted to cheer Her Majesty and the Duke of Edinburgh as they toured the Cannon Bridge pits. Nasdaq and NYSE deserve our plaudits. They have respectively captured the media in the parish on the death of Her Majesty. An elegant image of the late Queen on the wall of the Nasdaq market site marks for a highly arresting still, while a solemn Lynn Martin, dressed in black, captured the zeitgeist on video as the New York Stock Exchange floor fell silent in tribute to the Queen of Great Britain and the Commonwealth, whose long reign touched every citizen of the world. Ladies and gentlemen, God save the King. Last week, Business Standard newspaper asked the question if the former National Stock Exchange of India CEO Ravi Narain had joined India's list of fallen market heroes. 2 days later, with Ravi Narain currently under arrest and in custody for some days, I think, unfortunately, the clear answer is yes. Ravi's successor as NSE CEO, Chitra Ramkrishna, is also back in custody. Sad moments for the parish and very sad moments for the once poster child of the exchange era, at least the digital exchange era, the National Stock Exchange of India, which I'm sure is going to be working hard to rebuild its image under its new CEO. In happier news, congratulations to my friend and fellow world trader, Laura Mercurio. She's taking the reins at Blockchain Australia as CEO. That's a great move by the Australian blockchain lobby, and one which I'm sure delights all of my fellow world traders in the worshipful company, and indeed everyone who knows the effervescent and brilliant Laura from her many works across the investment banking industry. Of course, meantime, there's also a massive energy crisis story we're talking about here, and we're heading into winter. The incredible blitzkrieg impact of Ukraine's fight back over the last week cannot be underestimated, leaving us today to wonder in Exchange Invest, the magazine of the Bourse business, is it curtains for Mad Vlad? I don't know, ladies and gentlemen, but I'll point you in the direction of an article I've published today on LinkedIn and Medium, because it strikes me it could well be the case that we have mispriced everything, and come early next year, things could look a lot more optimistic. Have a look at that article if you get a chance after this show. Our guests today, ladies and gentlemen, are Guy Melamed and Magnus Almqvist. They are respectively representing Exberry building cloud-based exchanges. Of course, you may recognize Magnus. Previously, he has been on this show, episode number 22, where we were talking about the front-to-back digital exchange experience. And indeed, therefore, Magnus is in illustrious company as one of only 3 people so far, alongside Christopher Messina and Christopher Giancarlo, and therefore therefore the first person not called Christopher to make it back onto the IPO-VID show. Guy is debuting this evening. Guy is a co-founder and CEO of Exberry, the exchange technology pioneer who are revolutionizing markets. Guy's been selected by investing.com as one of 12 fintech leaders that are shaping the industry. Magnus has a solid understanding of exchanges and their evolving ecosystem universe as head of sales at Exberry with over 20 years experience, including head of sales at Aquis Exchange, heading Smart Group's London office, and as CTO of the London Stock Exchange Group's EDX. And may I say, it's a delight to see some of our viewers already early with the comments. Good evening to you, Ian Bonsor. It's lovely to see you. You were first man in today. And also good evening to Ian Miller. It's a delight to see you as well. Not sure who's added this comment, but we echo that this evening. God save the King, ladies and gentlemen. So, to our guests, to our incredible show today. And thank you, Chris Messina. It was you, I do believe, who's been saying God save the Queen. I know you've been in London this week, sapping up the incredible atmosphere of the emotions of the British people. Guy, where in the world are you today?
So good evening, Patrick. Great to see you and great to be on your show. We're from Tel Aviv, 8 p.m. in Tel Aviv. And let me start by offering my sincere condolences to the British people, royal family, Commonwealth, our partners and customers from around the world for the death of our beloved Queen.
Thank you very much, Guy. Welcome to the show. And Magnus, where do we find you this evening?
Hi, Patrick. Thank you. And thank you for that amazing welcome. It's great to be back on the show, of course. So I am based in London, central London.
Excellent. Good to see you coming to us today from central London. So, Guy, tell us a little bit. Give us the high-level introduction to Exberry.
So Exberry is actually have invested many years in developing the next generation of exchange infrastructure. So we collected most of the problems that we encountered in the industry. And we developed first of its kind cloud-native trading and matching engine, which is asset agnostic, could tag along to your proprietary and legacy technology. Could create a DLT settlement-based blockchain solution. So agnostic to blockchain as well. And basically, we've started with our engines. Today, we offer full infrastructure, exchange infrastructure. So basically, you can launch your exchange in matter of sometimes minutes, hours, or days. And from an operational perspective, we're cloud native, so we can run on every cloud. We can run on private cloud, public cloud, on-prem, and we can deliver low latency, high frequency trading capabilities. So that's really in a nutshell about our capabilities and who we are.
So it's a really, really interesting platform. You're totally born digital. You're not carrying legacy technology. You only came to market, Magnus, in the course of the last year or so, actually, pretty much during the COVID era.
Yes, that's right. And in many ways, that actually helped us. The progress and the sales funnel and the ability to close deals that we've seen over the last period, I think is second to none and surpassed my wildest expectations. During the COVID period, during the pandemic, people were quite willing to meet like this online on screen to actually close business deals without meeting anyone in person. And that ability to build trust and to build rapport and be able to convey properly what it is that we offer, and also for our prospects and customers to be able to convey what it is that they need. I think the people got used to working over Zoom, and they got and over other social media like this. And so, yeah, bizarrely, we were actually helped by the pandemic.
Fascinating. Launching into the pandemic, quite exciting. Let me just break off for a second and say, hello, Simon Huckle. Good evening, everyone. Hope you're all well. Likewise, Simon, hope everything is well in your world and that all is cushy with you. Good to see you this evening. Thanks for joining us. If you've got a question for Guy or Simon, don't forget, just drop it into the comments wherever you're watching us this evening, whether it's on Facebook, on LinkedIn, or YouTube. And also, if you get a chance, please send us a little bit of love, would you, ladies and gentlemen? That's always appreciated because it helps get us up through the AI algorithms, and therefore it means that the video is shown to more people as we're talking. Guy, tell me a little bit about your background, because I mean, you've really been quite heavily involved in the startup nation in Israel, so therefore you come with a tech-heavy background.
Yeah, so I've been 20 years in the tech industry. I started my career as a product and product strategist. I've been in various industries, from education technology, through mass consumer products, shared mobility. In the last 12 years in the fintech sector, I've been since early 2016 highly involved in the blockchain industry, trying to really find real use cases and partner to the first and only Israeli blockchain institutional blockchain hedge fund. So basically, I've been going through many industries, but in the last 12 years, mainly in the fintech sector. But definitely, yes, here in Israel, you know, we're surrounded by highly talented people being capable of solving complex problems. And I think in the world of capital markets, I've been encountered together with my partners and the team with one of the most complex and challenging solution of taking the world of trading and the world of capital markets into the cloud on the one hand, but at the same time also understanding let's say the complexities we're dealing with. I mean, 10 years ago, if we would speak about exchanges, it would be only national stock exchanges, but today we see them arise from a group of entrepreneurs. We see the diversification of financial instruments, and it was clear to us that we needed to build something on the one hand, enterprise grade solution, but on the other hand, that it could also serve light markets. So time to market, but also run on the cloud. From an operational perspective, it should be much more dynamic and robust than the current legacy and proprietary technology that exists out there. So basically, my background is definitely solving problems and creating product strategies and product design. But together with highly skilled teams, we were able here to invest many years in developing Exberry's next generation solution for capital markets.
Fascinating altogether. So, I mean, while building this next-gen solution, obviously you mentioned that magic word, cloud native. And I think it's very, very interesting, isn't it? Because just 10 years ago, not only were the impediments to market, and we were looking at the established exchanges and not a huge amount of competition, it was very nascent, as you say, Guy, but a lot of people would simply have said that the cloud was utterly impractical as a means for delivering an exchange. And clearly, that situation has rather changed, gentlemen, hasn't it? Magnus, tell us about it.
For sure. And if you look at it from a sort of 10,000 feet kind of perspective, I think the change is natural and expected. Everywhere else across technical industries, computer intensive, data intensive industries, we've seen a migration to the cloud. Sometimes with great resistance initially. And of course, naturally, that has come into capital markets and banks and operations and trading and various kind of big data storage solutions and surveillance solutions and so on. If you look at the FCA in the UK, for example, they are now running everything in the cloud. So it's a natural progression that, of course, stock exchanges, marketplaces also look then into the technologies that they use and see if they can benefit from the synergies, lower cost of ownership and flexibility that you get from running operations on cloud native platforms. Matching engines and running central limit order books in the cloud has had its challenges, and it's not surprising that that is kind of one of the last evolutionary steps. And the most easily accessible difficulty to kind of mention and discuss is the distribution of market data, where you need multicast to put forward a fair and orderly market, and that is a nut that we've cracked. Together with also, without cutting any corners, building from the bottom up a cloud native and SaaS delivered platform. And we're seeing the benefits now. Our customers, our clients, our prospects are seeing the benefits of how we can deliver these services. And we're just at the beginning. I think it's super exciting.
Well, that's it. I mean, it's the beginning of a journey. Obviously, as you said just earlier, it's a very exciting one, because it's almost been, in some ways, quite oddly turbocharged as a result of COVID, rather than actually being the opposite, where so many businesses were finding it difficult to manage to move forward during the course of COVID, which certainly makes for a very, very different story. Let me also just break off by saying that I'm delighted to see we've got a number of messages this evening. Sorry to hear, Chris Messina, that you're in a bad reception zone, but of course you'll be able to catch the replay, as will many others, because this show will be instantly available for replay on Facebook, LinkedIn and YouTube as soon as the live is over. Hello, Max Butty. That was guest number 002, our very first guest there, Chris Messina, and one of our most recent guests, Max Butty from the Swiss Exchange, the Swiss Digital Exchange, I should say, that arm of the Swiss Exchange infrastructure. And it's lovely to see you. He was guest number 69 in our pantheon of guests during the course of this show. So, okay, very interesting, because, I mean, you hit a number of things there, but, you know, let's jump to one thing that really intrigues me. I mean, everybody gets very excited about latency for super liquid products. How does latency work in the cloud?
So, you know, the issue of latency, first of all, it's solved. Okay, there are several words when we speak about cloud. Everyone immediately, you know, raise several issues. One would be latency, the other one would be security. How can we trust it? So it really depends on, you know, on what you want to achieve and what is the transaction rate you have, the amount of transactions you're running per second. Just to make things clear today, when I mentioned we're doing high frequency, low latency trading, we can do millions of transactions per second in microsecond latency. So faster and more stable than any other on-prem solution today on Earth. Now, this is to start with. So basically, latency, it has to do with the amount of transactions you wanna run. It has to do with the hardware you'll choose. Okay, in contrary to the hardware our colleagues are using around the world, they're buying the most sophisticated hardware, and a year later or 2 years later, they'll need to invest millions and tens of millions of dollars. So I think Magnus mentioned it before. So the cost of ownership here is crazy. So suddenly you're stuck in a non-innovative phase. So as for latency, when you know we plan the game from the get-go, and once we plan it, Patrick, you can reach the best latency. And sometimes much better than the ones that you have achieved on-prem solution, and on a much more cost-effective way. So yeah, that's on my side. Magnus, you want to add anything?
Yeah, Guy, I think you frame it really well, and I think low latency, high frequency trading, you are bound by the laws of physics. You can't there isn't a magic wand that kind of just solves all your issues. So whether you're physically located in LD4 here in London, for example, or if you are located in a cloud data center, you're still facing the same challenges. So you have to, of course, work with the data center partner, be that cloud-based or physically installed, where you can address the issues at hand. And as Guy is so eloquently putting it, it depends on what you need. It depends on what you want to achieve. So of course, proximity, hardware, distance between the matching engine and the algo, etc. All of those things matters, and it doesn't matter if your data center provider is cloud-based or physical. It's the same questions and roughly the same answers.
Yeah, naturally, last but not least, and it has to do with how we've built our tech, and that makes our tech in the cloud. When we say it's native, it's not exported from an on-prem solution to the cloud, hence stuck in terms of robustness, in terms of scaling up and scaling down. There are a lot of advantages once you've created a machine which is native to the cloud. So that has also to do with the tech that we've developed and the years of R&D that we've invested in our engines and our infrastructure.
Yes, I think that's a very, very good point, isn't it? Because there's so much that people think about, well, you can just move everything off into the cloud, which is a bit like taking your furniture at home and then deciding that you're going to leave it all in one of those access storage warehouses that are littered all over London and the United Kingdom. I mean, yes, it works, but actually then you can't sit on your sofa in the same way that you used to because it's no longer in your living room. And when you've actually designed the whole atmosphere, the whole environment, that therefore your code is digitally native in the cloud, it makes a huge difference. I'm here talking with Exberry. We're discussing building cloud-based exchanges, ladies and gentlemen. If you've got a question for our guests, Guy Melamed and Magnus Almqvist, we'll be delighted to pass them on to them. Thank you very much, Martin Watkins, also a previous alumni guest of this show, one of our earliest members to appear. Good evening, Patrick Young, Guy Melamed and Magnus Almqvist. Looking forward to another insightful IPO vid. Thank you very much, Martin, and hopefully you'll get a question in later. And indeed, let me say, I'm looking forward to seeing you next week as well. That should be a great evening with another IPO-VID guest, Sharon Constantian. And also, we've got Ruben Indigikian. Ruben, it's lovely to see you back on the show once again as we're discussing building cloud-based exchanges with Exberry. Your comment is a very well-made one. I hope online exchanges matching sellers with buyers will help SMEs to engage in international trade and get access to trade finance. And actually, that cuts through to a beautiful question, because I don't want you to give away the sales pipeline or who you're talking to confidentially, but you mentioned it in your introduction, Guy. You've also emphasized it, Magnus. I mean, the point of the whole system is that it's built for any asset, any kind of market, not merely the super liquids. So therefore, it does have the opportunity to revolutionize things like SME trading.
So, yeah, so definitely on the asset side, we are so surprised every day. I mean, we're highly honored to see the most traditional enterprise-grade national stock exchanges switching into cloud technology, looking into new innovative asset classes, and then definitely Exberry being one of the leading solutions out there today, not only to offer you free access to all of those asset classes, but also use cloud technology, or if required, even connect to a DLT-based settlement solution. So that's amazing. And that's really exciting, and that's in the backbone of the solution we've created and how we envisioned a part of the future. The second part of that reality are the SMEs and the surprising, exotic, quasi-exotic instruments that we see, that we can enable them by scaling up and down and creating solutions that match those sellers in those markets. And this is the opportunity of us being an independent tech vendor, serving the market first and not serving ourselves. And that's how we created our infrastructure, by enabling also those SMEs and sometimes startups. And we have a lot of work doing with startups in order to enable them to enrich our market and open our, break our boundaries and surprise us, because that's the only way of creating more and more innovation. And we can't forget that at the same time, we run juxtaposed to the regulation. And the regulators are seeing that continuously. And it creates another very interesting aspect of discussion. I don't know if for this podcast, but maybe for the next one. Magnus, what do you think?
Yeah, I love that question. I think it's a great question, and I think it's very healthy to go back to the kind of the raw underlying purpose of capital markets. We're here to enable financing. We're here to help companies raise capital. We're here to provide platforms for people to invest their capital and their savings, hopefully with a healthy return. And that capital should be put to good work. And of course, the future growth for any country, for any population, lies in the SMEs and their ability to access capital, be it for growth or be it for deal funding, and for kind of procuring commodities for their own production and so on. And I think this is where Exberry actually makes a real difference. And it's easy to kind of smirk at those kind of statements, but I think it is important. Through being so agile, by being cloud native, by being able to deploy new exchanges and marketplaces in a matter of days, we bring down the barrier of entry for new innovative type of marketplaces that exactly are seeking to address this market. And we have several examples of that in our prospect pipeline and customers where they are actively seeking to help SMEs make their capital raising a lot easier.
I think that's very exciting. And I mean, you hit the nail on the head there in terms of also the time to market, because that's one of the biggest problems, isn't it? I mean, if you look at Young's pyramid of exchanges, okay, the tier ones, they got loads of money and they got loads of their own tech or whatever. But by the time you get to the bottom end of tier 3, where you've been dealing with a lot of these new and startup exchanges, time to market matters, not so much because of the actual time to market, but because of the cost of sitting on top of this technology. I mean, a lot of places that are taking 3, 6, 9 months to install, and you're already paying a lot of fees before you can actually show it to the market. I mean, we've had a couple of spectacular failures also of people integrating their technology in recent months. We'll spare most of their blushes, but I have to say the Multi-Commodity Exchange of India's current fracas does make me laugh just a little bit, as we see the revenge of 63 moons there. But nonetheless, I mean, it's very, very interesting how these different enterprises can manage to get going much faster. And that's obviously also a great incremental source of saving money for a startup exchange. So, I mean, Magnus, tell me a little bit about what the journey's been like, because you say you're dealing with all manner of different markets. Now, again, I'm not asking you to give anything away, but you've been dealing with some really small startups all the way up through the pyramid?
Yes, we are, and for sure that makes our life very interesting. So one meeting could be with a sort of a guy and his dog with a bright idea, and they are pre-funding, and they are looking for how can they kind of materialize their great ideas. And the next call is with an incumbent sort of tier 1 or tier 2 stock exchange, looking at how they can gain efficiencies from working with someone like Exberry. And we have a very strong message to both of them. And I think that really speaks to the strength of our technology and to the people in the company, that we can help both of these very different types of prospects to excel.
Well, that's interesting, because actually, as we're sitting here talking about building cloud-based exchanges with Exberry, I've got a cracking question for you. It's quite long, actually. Well, I'm glad we've managed to rearrange the screen there, because you disappeared. The question was so long for a moment, Magnus. Let me read it to you. It's from Martin Watkins, because that's talking about another issue. You've just talked about the whole opportunity to manage to distribute markets. How has Exberry addressed the regulatory operational resilience requirements for cloud services to be resident in the respective jurisdictions? How cost effective is it to operate in 3 or more availability zones where they need to be located in different jurisdictions? Magnus, would you like to start on that?
Sure, I can start. I mean, it's a great question, first of all. I think, and again, it's you can't cut corners, obviously, and you need to be in different availability zones. You need a primary and a DR, and maybe even a third backup in a third availability zone. But that's also true for physical install. So again, you're seeing efficiencies, you're seeing much lower cost of ownership. If you look purely at the infrastructure cost, as Guy mentioned earlier, if you were on physical install, you buy your hardware, in 2 years it's old, then you need to upgrade it, and hey, guess what? You're in line behind the biggest buyers, which are cloud providers, to buy the latest and greatest hardware. So to have these 2 or 3 different installation sites with a reliable cloud provider, where you've also invested in a strong, good relationship with them, you will see great benefits and a much more flexible ownership. And we can go into a lot of detail there. I think it's kind of, does your backup site or your DR site, does it need to be available 24/7, or could there be some kind of giveaway where you can reduce its footprint and then have an arrangement where you can ramp it up very quickly? That elasticity is a great advantage when you're running markets that fluctuate greatly in volume from day to day, from week to week.
Mm-hmm.
I think that's a very interesting point about the elasticity of markets. Guy, please.
Yeah, I would also add to what Magnus just mentioned, and I think that's the core of the cloud evolution. There, we should climb up for a second and see that we're going into a cloud revolution. It's happening in capital markets, all right? And I think first of all, we see the movement of the big birds. And the cloud providers. They're investing a lot of funds in infrastructure. They're investing a lot in capital markets. That's one trajectory. The second trajectory is what's happening on the regulation side. The regulators are advancing every day. Okay, so we see the MAS in Singapore, and we see the FCA, and we see other regulators, and we speak to all of them. So we're aware of the changes that are taking place, and we know that their tempo is slower, and in a justified manner, it's slower, and the requirements are there, and we have highly advanced DR solutions that will support that, and we have ways of cutting costs. So however you look at it, okay, your cost would be lower, and your solution would be more elastic and robust than your current solution. So right now it seems a bit more complex to create some of the solutions based on the regulatory requirements. But first of all, it's possible, and second, in a year time, we'll probably won't see it even as a barrier to entrance.
Yeah.
Can't hear you.
Sorry, I was muting myself against the noise in the background. The interesting part about that is that, of course, then the physical cost of installing is always going to be more expensive if you try to do something on-prem across different areas than it is if you're super flexible and in the cloud across several areas.
It goes without saying. Definitely, it'll be always a much more, the on-prem solution would be much more expensive, and going cloud will cut your cost, will cut your cost of ownership. And just reverting back on the point before that, even when, especially for the big enterprise players, tier 1s, tier 2s, and tier 3s, that are waiting sometimes for years to get their tech, and then they need 50, 100, 25 developers to accept the tech and deploy it. Once you cross the way to the cloud, and we haven't discussed it yet, you move also to a SaaS model, to a software as a service model, and then you get everything as a service. So you can scale up and you can scale down. So your cost is going down not only on the hardware, it's an overall cutting off your costs, and that's important. We haven't touched that yet, but it's an important part of the revolution also in the business model that enters the industry.
And I think that's a great moment actually to enter into that conversation. Precisely, Guy. You're prompting me beautifully. I could actually disappear off and quick cup of tea actually at the moment. It's fabulous. This. No, you're
I basically
right.
want to co-host. I want to co-host.
You're doing such a good job. We'll get you back, no problem whatsoever. Or even better, bring us over to Tel Aviv and we'll do a couple of shows from there. That sounds like an idea, you know.
That's the plan. Done deal.
But remember, I come from Belfast, same place as Chaim Herzog. Vitally important to always remember in these conversations. So you mentioned that. I mean, you know, a lot of people think of going to the cloud as just taking your pictures, sticking them from the base of your computer into Dropbox. But actually, when you've got the 3D moving parts of computer technology and you've designed something for the cloud, everything is changed about your relationship, right?
Correct. I mean, imagine the three of us are opening now a new podcast, an amazing show, and we'll need to open 3 new accounts for our email. It'll take us about 10 minutes to log into whatever email provider and launch email accounts to all of us and all the people that are working with us. And same for Exberry. I mean, the great evolution that we're serving here is that once you've decided to open a new market or replace an old market, and use our engine or our full infrastructure solution. Once we understand your market, you don't need 50 or 100 developers to wait for the tech and then start massaging the tech and preparing it and supporting it. You know, it's a totally different ballgame. Basically, you're getting everything as a service. Okay, so if you get a new feature going live soon, okay, you'll simply see it on your system, and that is, you know, that is a SaaS model that we know from so many other industries, but our industry still doesn't use that model. So that's very exciting for our clients and prospects, especially the highly enterprise grade solutions, but also for the startups. It seems like it goes without saying. And for the SMEs, it goes without saying. But for the more established markets, it's a change of paradigm. And I think once they understand it, it's like it's a winner.
It's fascinating. I mean, that whole paradigm shift, because as you say, you no longer need to have an office with, even for small exchanges, 4 or 6 or 8 or 10 devs sitting around who all have to sit around for 3 or 4 or 6 months while you're installing your software in order to get it ready, to put it in the basement, to do everything. Because, okay, it's not necessarily the work of a couple of hours, but we are starting to talk days and weeks rather than talking months and years. And equally, I you know, the other thing I have to say is I can see that there are a lot of hoteliers who are going to be very upset because there's no longer the same need to spend 3 days in some exotic resort doing design study meetings, because you have the technology. It's effectively giving somebody the way to just tailor that to what they need, which is a matter of days, weeks, rather than being months and years.
Yeah. First of all, you're right. We love design studies. We still love design studies. We love understanding our clients, understanding the problem in order to bring the right solution. But our tech is so robust and scalable that once we understand it, and you know, it's a challenge. With me being in meetings, one of my partners heading our products, you know, sometimes I surprise them. Not sometimes, almost every meeting I surprise them. And once we understand what's the market live during the meeting, I ask them to configure a system and show everyone. And that's the moment where they see how robust and special our solution is. But you're totally right, Patrick. That's a change in paradigm that in any other business, you know it's happening already, and it should be also in ours.
Yes, it all shocks me that you've got everybody's using Gmail or some sort of mail in the cloud. We're sharing documents in the cloud. We're using Dropbox. We're using everything. Home, everywhere. I mean, our recipes are stored in Dropbox. We've got everything in the cloud. And then you go to an exchange and people want to take you around a room on the second floor of the basement in order to look at huge amounts of cabling.
You're so
Sorry,
right.
Magnus, you were going to say something.
Well, I think we covered the point really well, but the moving from an on-prem and in-house managed paradigm to a SaaS-driven paradigm there is a journey to kind of wrap your head around what that actually entails and what that actually means. And I think Guy has explained that very carefully. And that's where the true gains, the true winnings are lying. For sure, your infrastructure is easier to maintain, and it's an easier relationship with your hardware and making it humming and running in a cloud installation. But then also is this whole other layer of managing your installations, your software, making sure it's running and so on. And to not only do we see these huge savings in the initial install, getting yourself up and running, but then also ongoing running, and that maybe there the savings are even greater, in that you don't need large upgrades anymore, regardless for the reason for that underlying upgrade. You know, infrastructure is seamlessly expanding as your business grows. You're continuously on the latest version, and so this whole idea of large upgrades, it just evaporates.
So the large upgrades evaporate, and also then presumably on an ongoing basis, a client exchange can compress what has been the classic IT team down to some systems administrators. And I mean, actually, what do you need then if you're using Exberry as your IT team?
That's a great question, and that varies from exchange to exchange and how their sort of wider system picture actually looks like. But when it comes to managing the technology, the services, the solutions that we provide, and then it's all business management. And of course, having the in-house ability to challenge us and to manage us properly and to ask the right questions to us. But chiefly, you can really be focused on setting up and configuring and managing your markets, your customers, and the assets that you're making available for trading.
Very interesting. Let me pop over to Ian Miller. Hello again, Ian. Lovely to see you this evening. He's asked another long question. How does the latest nuance of cloud-based exchanges fit within the rollout, which is underway across all exchanges, of regulation to all crypto businesses? How does that work? I mean, how do you manage to integrate in terms of delivering crypto assets and then also delivering all of the regulatory bells and whistles that are needed in an exchange system? Who's going first?
I can start there. It's funny, right? Because I hardly understand the question anymore. I'm so used to it now. And it's a great question. So I appreciate that you're asking it. I think we've built Exberry to be compliant with capital markets requirements from the bottom up. And we've now passed through so many of the audits and the detailed analysis of our exchange technology, our services, and how it's delivered, that we know that it meets those very stringent requirements. And also going on then to the adoption of cryptocurrencies in whatever form they will evolve into, and the necessary then integration with various forms of blockchain technology, then you almost take cloud for granted. To integrate with DLTs, to then be much more flexible in the interfaces and where you get data from and where you send data to. I think, it just needs to be cloud native. It's a natural progression that we see, that is pushed forward by the crypto adaptation that we see across the globe.
And it's very interesting, isn't it? I mean, we see a lot of people talking about the legacy exchange business and the cloud and the digital asset business as being entirely different. Whereas it all seems to me that they're remarkably similar. I mean, they're like one side of the Twix versus the other side of the Twix with bells and whistles. But your design is completely asset agnostic.
We're completely asset agnostic, referring to the previous long question about crypto. Crypto assets will run on the cloud. As a fact, the DLT solution has to do with a real use case of blockchain technology, which is something else which connects to your current question, Patrick. and I think one of the major differences would be the settlement solution, which are blockchain based, and there we might see maybe change in a difference in approach from one geo to another. But once you speak about highly liquid assets, then one will need to adopt a DLT solution in order to support this kind of business.
I think that's very interesting, because obviously you're looking at a lot of different kinds of assets, and also even in the crypto and digital asset business. I mean, a lot of these things are highly liquid. A lot of them are also highly illiquid. It's just like the legacy asset business. How do you then manage to get around delivering the ideal environment for all parties in these different kinds of exchanges?
That's an amazing question. I think that's one of the core questions of understanding Exberry. Exberry is a managed service. What we've created to the world. Okay, now the core is so robust and elastic. Okay, and when we say it's asset agnostic, it's asset agnostic. We're supporting all assets, and we can simply configure it in a very easy way today. And it's not an easy task to do, but it has been done in years of development. But that's the backbone of everything we've created, and that's now it's the fun stuff. You know, you come with a blockchain-based asset, highly liquid, needs settlement on a certain blockchain with very, let's say, specific topologies like every instrument has. Okay, once we understand it, and that's the design study you mentioned before, or that's the chat we're having on a cup of coffee, just to understand what you want to do with this instrument, how you're going to trade it. And once we understand it, it takes us really not a lot of time to configure it, and then you can run with it.
Fabulous. I mean, that makes a really, really interesting discussion. And I suppose, and I'm quite shocked actually that we haven't heard this while we've been discussing building cloud-based exchanges for the last 45 minutes. Well, what exactly then are the pitfalls to going into using and building a cloud-based exchange?
What is what? Sorry, I couldn't hear
the pitfalls. So that's all right. What are the pitfalls?
Yeah, go ahead, Magnus. You want to start?
Yeah, well, I can give a couple of snippets. I think we're living in a what fundamentally is a very mixed world right now, especially if we're looking at the crypto adoption. So we have exchanges, marketplaces that are operating in a kind of near real-time settlement environment. So certainly T+0 settled. And then we have a large bulk of institutions that represent the lion's share of the invested capital in the capital markets world, where things are settled T+2 or even longer. And to marry those two, to live in a mixed world with different settlement cycles and different reconciliation requirements and different support levels in the kind of post-trade part is one of the big challenges, I think, for anyone who wants to bridge both of those worlds. So I think that is one of the big pitfalls. The other thing to really carefully think about is as always when you launch something, is kind of who are your clients, who is your target audience, and how will they connect, how will they reach you, and what are their requirements, and then make sure that you can meet those. And with most cloud providers today, you can. But you need to think about it, and you need to have that conversation with us and with the cloud provider of your choice.
But in essence, what you're actually saying is that most of the problems that you're going to have in the cloud are actually the same problems as you're going to have if you're on-prem, if I may say so. I mean, there's no fundamental problem with going to this exciting new managed solution, software as a service, having your market in the cloud, that actually is a new bump in the carpet. Although I suppose some people may say, I mean, surely there must be some sort of an issue with latency. I mean, I think probably, at least to the average human, they think, well, there's got to be kind of some sort of a latency issue. How does that actually manage to work in the cloud?
Sure. So if you're high frequency colo and you have participants that worry about the length of fiber from the POP to their algo, if that is your predominant kind of target customer base, then you will need to work very closely with the cloud provider, because you need to make sure that the racks that your servers are sitting in are well known and well understood, and also that same cloud provider can provide access in racks that are very close, and you in effect mimic and MD4 setup by using a cloud provider to do that. That is today possible, but it requires a lot of homework and a lot of discussions, etc. But for sure, in that very niche space, then those are challenges.
And actually, sorry, just one thing that occurs to me as we're talking here, you mentioned cloud providers. Are you essentially cloud provider agnostic, or is there an issue in terms of what a cloud provider needs to be able to do to work with the high performance of the Exberry system?
We are definitely cloud provider agnostic, and even more than that, if we understood that the best solution for you still is to be on bare metal, we are capable, more than capable, of doing bare metal installations as well. But as to the cloud, definitely we're a cloud provider agnostic.
Excellent altogether. Got a couple of questions, comments. Thank you very much for the love. Beata Young, John T, a very interesting discussion this evening. It is a very interesting discussion, building cloud-based exchanges, I think, all around. And there are so many points about this whole new world of thinking that are just absolutely fascinating in relation to where we've been previously with how markets work. So therefore, Magnus, give us a little flavor. I mean, what are the sort of markets that we are hopefully going to expect to see on Exberry in the near future?
Sure, that's a great question. And I actually have two separate answers. What I want to see and what I hope to see is that we see a tokenization adoption broadly across capital markets. So we start building exchanges and marketplaces where reconciliation processes and settlement processes and so on are reduced down to T0, and using smart contracts to create, transfer, and store those assets with a cloud native matching engine sitting on top of that infrastructure. I think that is the future. I think that is undoubtedly so. So I do predict that we will see quite a rapid ramp up of tokenizing of what we could call normal assets. The other answer is that I just don't know. It's so exciting. The innovation, the rate of innovation, the new type of assets that we're seeing, the type of exchanges and marketplaces, and the innovators behind those marketplaces. It's completely new type of players, and they are also reaching out to a completely new type of investors that are used to a very different way to absorb information and make decisions, and then their expectations how to access these investment products. It's a completely new world, and I think that is super exciting. We're only seeing the very, very, very beginning of that, and there are lots of buzzwords with Web3 and so on around that. But fundamentally, it's about how do you deliver information, how do you help people make investment decisions, and once they've made that decision, how do they access the instruments they want to trade? And that world is just going to change completely over the next several years, and we're part of that evolution. And yeah, I keep saying that it's very exciting.
I think that's enthralling altogether. So therefore, actually, I think that leads us really elegantly to, the final question of the show, which is really, where do you think the revolution goes next? And in some ways, maybe you've answered that, Magnus, but perhaps you've got something to add to it before we go to Guy. You're good, Magnus. You think you've added everything you need to
I leave that to Guy with warm hands.
You're gonna leave it to the CEO. Well, Guy, you're sitting in the startup nation, Israel, an incredible history that we've seen of amazing development, a massive tech hub, but at the same time, not somewhere that's really been super associated with exchanges over the year, although we've seen a fabulous rejuvenation of the Tel Aviv Stock Exchange just in the course of the last couple of years. Where do you think the capital market revolution goes next?
So first of all, you've touched one of the most painful points, and one of our challenges also is an Israeli-based tech vendor, tech company, is to expose Israel to the world of capital markets and the financial industry, and attract more and more players to Israel, and by that actually opening our arena to that world, and being able to bring more and more innovative solutions and tech to our industry. So that's on a personal note and a professional note. As for the industry, I definitely think that the last research that I read said that the tier ones and the tier twos of national stock exchanges will move to the cloud only around 2026 till 2028. I believe that in the coming 12 to 24 months, we will see most of the tier ones and the tier twos move to the cloud already. Okay, we will see this innovation using also cloud-based matching engine, native matching engines, which are cloud-based. We'll see them integrated already. Today, having Exberry is the only one out there, but hopefully we'll see that evolve. I believe we will see more and more DLT-based settlement solutions, and that's really pending on the regulators in different geos. But I think it's one of the most real use cases that I've encountered. Again, using centralized order book, and that's something we believe and stands behind Exberry and our industry. So that is definitely another thing I'm looking forward to. The change of investors. I mean, today, looking at 18 years old, investing in a different way, and by that creating new markets and new innovative instruments. I think that's intriguing, and I think that's one of the major changes that will create new entrepreneurs and new markets. And that's what I want to see. I want to see the diversification of instruments in the coming year. And I want to see the diversification of markets by having young and enthusiastic entrepreneurs being able to launch their markets with solutions like Exberry's and more, because we make it available and we make it applicable for the smallest markets and the most big and traditional markets. So that's from my perspective. I hope it's enough. I have more if we have another hour.
I think that other hour is going to be used in the near future, but I think it's going to be in another show, possibly with my new co-host here, Guy Melamed from Tel Aviv. Who knows? That has been a fascinating surmise, because I think you go back 25 years, what were we talking about in Capital Market Revolution, the book? We were talking about liquidity, accessibility, transparency. The thing that you hit on the head with the whole cloud revolution, which makes me so excited as a builder of exchanges and someone who enjoys helping other entrepreneurs build their exchanges and their markets of future, is that whole agile cloud-based opportunity that you're enabling, because it allows people to come in and build exchanges with technology that is state of the art, but on the other hand is state of the art without them having to take on the whole concept of a legacy technology department. And therefore, as you said, Magnus, allows them to have the instant upgrades, etc., etc. And at the same time, as you were saying, Guy, is asset agnostic, is settlement agnostic. And it's going to be so exciting to see what we can manage to bring together in the blockchain future of settlement, as you were talking about, Guy, and also tokenization, as you were talking about, Magnus. This has been an absolutely fascinating glimpse of the next generation of exchanges. Will it be 12 12 to 24 months. Will it be 2026 or 2028 by the time that the tier ones and the tier two exchanges in Young's Pyramid catch up? Well, that we're going to find out. You can catch our latest podcast, incidentally, ladies and gentlemen, with Tom McMahon. We've been talking about energizing new markets. That was just a couple of months back. We were discussing that with Tom. And equally, ladies and gentlemen, we are looking next week to coming of age with ICE, the Intercontinental Exchange. And that's going to be with, well, I hesitate to say it about any lady, but she has been there for over 20 years, Katerina Karamashi has been genuinely a veteran of life in the equity products revolution that we've seen taking place over the course of the last 20 years. Ladies and gentlemen, my name is Patrick L. Young. Our guests today were Melamed and Magnus Almqvist. We've got a fantastic roster of different presentations and people engaging with us. Thank you very, very much to each and all of you. Ian Bonsor, Ian Miller, Chris Messina, Simon Huckle, Max Butty, Martin Watkins, Ruben Indijiki and Beata Young and John T. Thank you to the production team, Jamil, Racy and Mary. I wish you a great day, a great night in blockchain life and markets. This is Patrick Young saying good night.
Good night.